Welcome to ForexTV.com. Today is Wednesday, November 26th. I'm Kathleen Reddington with your New York Forex Market Buzz. The dollar gained on the majors as recession fears grow. And now for a look at the latest headlines from the CEP News Desk. New home sales in the U.S. fell more than expected, declining 5.3% in October to an annual pace of 433,000. Economists were expecting October data to fall 5% to 441,000. Initial claims for unemployment benefits in the U.S. fell more than expected to 529,000. Continuing claims unexpectedly declined to 3.962 million for the week ending November 15th. Initial jobless claims were forecast to fall 535,000 for the week ending November 22nd. Last week's figure, which reached a 16-year high, was revised up by 1,000 to 543,000. The all-time high for initial jobless claims is 695,000. Personal spending dropped in line with expectations as personal income rose much higher than anticipated in October. Total personal spending, which comprises roughly 70% of U.S. GDP, fell a full 1% in the month, following a cutback of 0.3% in September. Annually, spending has risen 2.3%. And European Commission President José Manuel Barroso outlined a EU-wide stimulus package proposal for Wednesday that would be worth $200 billion to help boost the economy and better resist the impact of ongoing financial crisis. Today we are joined by Derek Frey of ONF Futures and Options. Hi Derek, how are you today?
Good, how are you?
Crude stockpiles jumped for the week. In the EIA report, they climbed by about 7 million barrels. We saw a sharp change in currency trading after this release. We saw the U.S. Dollar and the CAD gain, and the U.S. dollar and the euro pair fall sharply lower. Now, the U.S. dollar-euro pair, the U.S. dollar has gained on the euro since then. But what do you make of the sharp fall in the euro-dollar pair after this release?
Well, frankly, we're looking at a more macro turn down in the dollar itself, and we're ultimately looking at, have been calling this kind of turn here in the dollar for the last week or so, and expected this kind of this turn in the dollar to happen. So at this point, we're happy to see these sharp pullbacks in the euro because we're looking at them as fresh buying opportunities. We believe that the lows that we put in just below $1.25 on the euro are probably going to be the lows for the year, more than likely be the lows for the year, in fact, and ultimately provide some good footing and some support for future rallies here. So I think by and large that the writing is on the wall here for the dollar. I mean, I don't mean to be unpatriotic or anything like that, but the Fed has really sealed our fate. They have printed, they've basically become reckless, is the nicest way to say it, in their creation of dollars. And this reckless creation of dollars, ultimately is going to lead only to one place. Historically speaking, the reckless creation of any currency, it doesn't just have to be dollars, but the creation of any currency has ultimately always led to inflation. And to the level that we've created all of this new currency, keep in mind, the Fed has been literally printing dollars, creating new dollars, and putting new dollars into circulation every day since 1997. And it's only been in the last year now with all these crazy bailouts that the pace of that creation of currency has accelerated, to an almost breakneck pace. So as I said, I mean, we see, hyperinflation coming in 2009 and 2010. Not this. I know that there's this chatter about disinflation or deflation or stagflation or all these other fancy little words for slowdown, but we don't buy it. Sorry, it just doesn't. It flies in the face of everything that anybody's ever learned about economics 101. In the long run, we've seen those Econ 101 ideas bear themselves out more often than not. So we're going to use history as our guide. And historically speaking, the creation of excess currency has always led to inflation. We have no reason to believe that this is going to be any different.
All right. Now, speaking of adding currency to an economy, the Eurozone announced an economic stimulus package today, and the Bank of England announced one yesterday. Are these going to work in the long term, or is it going to be like you're saying, adding currency recklessly?
Yeah, no, I don't. I mean, I'm not a believer in any of these bailouts. Frankly, I'm kind of a libertarian about it, if you will. I think these institutions should be allowed to fail. If you historically look at government interventions on behalf of failing entities, whatever government we're talking about, doesn't have to be the U.S. or Europe, you can look at it anywhere, in almost, with very few exceptions, it basically never works. There's been a few exceptions going back for a couple of hundred years where it's actually worked, at least to a minor degree, but for the vast majority of time, these bailouts never ultimately work. Really, the best, if you look at past financial crises around the world, and you look at them on charts, the ones that have been fast, have been, in other words, fast to turn back the other way, have been the ones that were allowed to fail, that did make at the time, of course, a horrific kind of collapse. But then the reaction back out of the depths of that collapse was rather quick as well. Our belief here is that the actions that all of these governments are taking are doing nothing more than, like I've already said, creating lots of currency around the world, but at the same time really just slowing down the inevitable. It's not preventing any of this from happening. It's not like, it's not like our government buying all of these bad assets is going to change anything. I mean, all they're doing is transferring the bad assets. It's not like they're going away. They're just transferring them from one set of books to another. We still have to deal with all of that stuff. It's not like you can just sweep that stuff under the rug. It would be nice at this point, but unfortunately that's not the reality. So I mean, we've got a tough road ahead of us, to say the least.
All right, and due to the holiday tomorrow, we've had an influx of economic reports coming out this morning and throughout the day in the U.S. We had some personal spending, durable goods orders, petroleum report. Because there are so many coming out today, is it really going to have a long-lasting effect on the markets today?
I don't think so, honestly. Today, in fact, what we've been advising people for this week is really to try to stay out of the market, to be honest, because you have a constant, literally every minute that's ticking by here today, liquidity is drying up more and more because literally people are leaving to go on vacation and go to grandma's for Thanksgiving or whatever. So as that liquidity dries up, the volatility in the market is to increase. Volatility and liquidity are inversely correlated in most cases. So you are going to probably see a lot of exaggerated movement, especially tomorrow when basically everybody in the U.S. is not around. Friday's kind of a weird day, a half day, if you will, for a lot of traders. So a little bit more liquidity on Friday than we will tomorrow. But no, I would be very cautious reading into any of the major technical levels or any of the major reports or events or anything that comes out this week, because the reaction to those reports and the reaction to those numbers is a little bit overdone simply because of the lower liquidity.
All right, and before we let you go, as you know, Thanksgiving is tomorrow, and it seems that we've just been hearing more and more bad news. So what does the market have to be thankful for?
That's a good question. What does the market have to be thankful for? I think the stock market can be thankful that it looks at least temporarily like it's found a bottom, and you can get at least some kind of a dead cat bounce out of it for people to unload some of their shares, if you will. I don't know. I hate to be a pessimist, but there's not a lot of good news, unfortunately, to key off of right now. I think the good news is that we haven't completely collapsed, and that we are able to kind of muddle our way through this. But these government interventions are continuing to complicate it at best the situation and not really remedy anything. So I don't know. I guess you know what, I'll say the best thing that the market can be thankful for is it looks like the team that Obama's putting together is being well received by the Wall Street as a whole. So hopefully that'll spur some good news going forward.
All right, that sounds good. Thanks for being on the show today, Derek.
Okay, have a good holiday, and thanks for having me.
You too. All right, this has been your New York Forex Market Buzz with Derek Frey of ONF Futures and Options. I'm Kathleen Reddington. Join us later this afternoon for PM Exchange right here on ForexTV.com.